30,000 people in mortgage arrears. Lenders are now trying to tackle the plight of those who are struggling.
Split and trade-down mortgages are just some of the products being offered, but will they provide any real help? Personal finance expert Carl Dieter joins us now to discuss this.
Morning, Carl.
Hiya.
How are you?
I'm still getting over the visual of Martin in an elf suit upstairs. I was actually giving my mind a blank thinking about that.
Well, I suppose it's probably because you are tired, because Carl just had a baby 2 weeks ago.
Congratulations.
Yeah.
Congratulations to you.
Second son Casey came along and enjoying every moment other than the end of sleep deprivation moments.
Well,
but
yes.
That's part of what you get.
Japanese used to use it to get information out of soldiers during the war.
I'd confess, if you give me anything, and if there was 8 hours sleep on the other end of it, I'd sign up to it. Doesn't matter what the confession was for.
Okay, well, look, try and get your head around this today. We have, we're discussing, I suppose, options for those out there watching who are in mortgage arrears. And we'll start off with split mortgages. Good or bad idea?
Split mortgages, just to, I suppose, explain what they are, is if you're in arrears and you can't pay your loan, that the lender will split it. Not necessarily in half, but to some degree to where you have an affordable portion that you start to pay, and then there's a part that's parked and put on the long finger. Depending on the lender, some of them do them. AIB, EBS, Bank of Ireland, Permanent TSB, KBC and National Irish Bank are all saying that they're going to do them. Others don't. But that split portion, the part that gets parked, might have interest applied to it or not. In the case of Allied Irish Bank and EBS, they're not going to apply any interest. All the others will. So if you actually undertook this mortgage, you'd be having interest added on top. Yeah. It's what's called in our jargon, reverse amortization. In other words, that loan is getting bigger rather than smaller. So when you come to the end of your loan, which might be when you're in your 60s, for instance, you're told, listen, you had this split portion, say it was 100,000, but it's built up to 150,000 now. I don't know how people are going to pay that without maybe selling the house anyway. So,
but you would have had to have paid that interest anyway, wouldn't you, if you hadn't split the mortgage?
You would have, precisely. But that kind of gets back to the whole area of our really inventive solutions that kind of do and don't work, the answer, or should you do what the likes of, say, Pepper, which are an Australian bank that took over GE Money, are doing, and saying to people, listen, if you're in serious arrears, sell the property. You know, we'll take the first 50% of the loss in some instances, and beyond that, then you have to shoulder it. But that's burden sharing. They're kind of both taking responsibility for it, and that's a very effective method. Whereas this kind of puts something off. Granted, you get to stay in your home, but you might be coming to retirement and have this huge bill that you can't pay.
Right, and of course, and if you have been setting something aside in a pension scheme, you may have to offer up that lump sum to rid yourself of that debt.
If you have a pension scheme, I mean, pensions are something that are really underfunded. You have a lot of people in defined schemes which are not performing, so it's not a case that everyone is going to have these lump sums. A huge amount of the population are reliant only on the state pension. So I think split mortgages, you really got to get into the nuts and bolts of each situation, but by and large, I don't think they're going to prove to be a highly popular product, except for where people are absolutely determined to stay put, even if it means that they might not be able to keep that house when they're older. And I typically imagine that would be because they might have children and just they don't want to make a big change like that. There's kind of three other options as well then.
Trade-down mortgage.
Yeah, that's another one that banks are saying could be a solution. Now, typically, if you look at who was buying during the boom, it wasn't older people. People, when they trade down, it usually tends to be because they're older or they're more mature and they split up and the family breaks in half, and so they go for smaller places. What we're seeing, certainly, is that people who bought during the boom and who have problems, they probably need a bigger house. They started off in a 1 or 2 bed apartment, they've got 2 children, it's actually not an appropriate housing for them anymore. So again, I think that's going to be a very small part of the population that get fixed with this. But the idea being, by lowering your overall debt level, that you're more able to pay it. And the thing about the first 2 things we've discussed is that they're not actually operational yet. So I suppose some of the things with mortgages, and let's bear in mind, this has been going on for about 5 years now, and these ideas are around for the last 2 to 3 years. It's like being in a car accident. You arrive into the emergency room and you say to the triage nurse, yeah, my leg is hanging off. I'm in pretty bad shape. What are we going to do? She looks at you and says, actually, great news. We've got this plastic surgeon. We can bring him in all the way from America. He's the very best there is. He'll put that leg back. It'll be just like brand new. And if that doesn't work, we'll get you the absolute best prosthetic limb from some other guy who's the top consultant in Europe. And if that doesn't work, and they have all these ideas, and you say, great, let's do it. Oh, well, that's the hitch, you see. You're going to have to wait 3 years. And so that's kind of the way that we've been dealing with this mortgage crisis. It's been brewing and brewing and brewing. And these ideas that are being put forward, it's really part of a great PR machine, because in practice, they're really not happening. Another idea on there is this mortgage to rent scheme.
Yeah.
Now, there was a report out last weekend that there's only been one transaction completed under this mortgage to rent scheme. Like, only one homeowner has benefited from it, and it's been giving homeowners false hope.
I think you're absolutely right, and that's true. You know, that's what they came out last week, and it was a headline. They said, wow, this big idea that we've been told is so wonderful and will work for so many people actually isn't happening.
Describe the scheme. It's whereby you sell your house.
Yeah, mortgage to rent means you have to earn below a certain amount, and if you have kids, they put a bit on top of it. But what happens is that you have to qualify for social housing, and then your house is either sold to a local authority or a housing agency, and then you rent it back. So you lose your house, you're not the main owner anymore, but you get to stay there. Now, the nice thing is that you skip 100,000 people who are in the queue for social housing. Whether that's fair or not, just that you get social housing because you had bought a house in the past is a different question, but it is nice in that respect that you don't have to go to the back of a 100,000 person long queue. And you also don't have to leave your home. You don't get to keep it, though. In terms of the idea, I think it's not a bad one, although the truth behind it is, when you see the figures of how many are happening, is that it isn't. There's only one. Yeah. And so some of the really good ideas we have don't happen.
Well, the Department of Environment have said that more cases are due to be finalised, but apparently it's a very complex procedure to do it, and that's what the hold-up is. But, you know, people out there thinking that it's happening, and it was been talked about for a long time, and then there's one completed. So
there's a huge amount of all you can do is call it spin. Yeah. That these things are being talked about and then they're not happening.
Let's move on to quickly to debt write-off.
That's the most effective. That's, of the four ideas that are kind of being jostled around at the moment, debt write-off is the best, and it works. It's been shown to work in Sweden, it's been shown to work in the USA, it's been shown to work very effectively in Iceland. The IMF have reported this. We all know it works. The sad thing is, though, is that when we saved our banks, what it meant was that they didn't have to take those write-downs. You see, typically when a bank gets into trouble and they have to shut down, they might sell €1 billion worth of mortgages for 400 million euro. Well, the person who buys them turns around to the borrower and says, listen, you owed 100,000 in the past. We bought that debt for 40 grand. We're going to cut half of that out. You just repay us 50,000 and you win because you pay less, and we win because we make money, which is more than what we bought it for, and everybody wins except for the original loser, who was the lender, the first lender, and that's the way it should have been. We didn't do that. So what happened is we've got it topsy-turvy, where the bank gets saved and we paid that money, and now in turn they're going to take more money off us, so you're paying twice, and instead it works out the worst of both worlds. And I suppose that eventually what we have to do is see those write-offs occur and kind of change our mindset, that it's not so much that you're kicking people out of homes. They're getting a fresh start. They're getting to begin again. I mean, failure is part of life. Take your knocks, get up, start again. Everybody has moved house at some stage. That's all you're doing. You've got to get away from this idea that moving house is the worst thing that could ever happen to you, and instead supplanting that with these surrogate ideas, which are actually either not working or don't work, or the ones that are good aren't happening. And so that's why I'm a big fan of write-downs. Just make the banks take the loss, move on.
Okay, Carl, we'll continue this conversation. We've run out of time, unfortunately, this morning, but many thanks for coming on.
Thank you.
And don't forget, if you've missed any of the programme, you can catch it online at